Welcome back to another video. It is 6:31 a.m. on the 10th of September, Thursday, 2020. And the markets have just opened and a lot has recovered. So let's go ahead and start off with this news and then we'll roll into an interesting article I found on Zero Hedge. Crypto market cap gains 22 billion as Bitcoin, Wall Street, and gold rebound massively. Wall Street and gold saw decent price increases during yesterday's trading session, while Bitcoin had followed the trend with a 3% increase. Alts register some impressive gains and reduce BTC's dominance. Bitcoin has followed Wednesday's increases on Wall Street and has risen to about 10,400, which is mostly true. Most altcoins are also in green as the total market cap sees a 22 billion addition over the past day. Ethereum, Polkadot, and Chainlink surged by approximately 10%, while DeFi tokens lead the way with the most gains as YFI touches the 3 Bitcoin mark once again. Ethereum above 370. The altcoin market sustained some severe losses in the past week. Nevertheless, they are displaying signs of recovery today, with green being the predominant color. Ethereum is up by 10% to above 370, while Ripple increases by 4% to nearly 25 cents. Coin360 is looking all green. Chainlink defends its top 5 position by a surge to 10% surge to 13. However, Bitcoin Cash and Polkadot are still breathing down Link's neck. Bitcoin Cash is worthless. I hate that stuff. You can jump into it if you want to spread your chips out, but I hate that. I hate the forks and the forks of forks. To me, it's all just a giant scam. Okay. The most impressive gains are evident from DeFi-related coins, which suffered the most in the past week. Yeah, so be careful with the whole DeFi thing. It's kind of a crazy bubble. I'm not even going to read the next paragraph here. You can check it out yourself on the video or go to the article. But yeah, this is all about DeFi coins, which I'm not really interested in, other than the ones that were already DeFi way before the word was hot. Bitcoin follows Wall Street and gold and defends $10,000. The primary cryptocurrency dropped below 10K once again yesterday. However, the bulls didn't allow any further declines, and Bitcoin bulls have successfully won the 10K battle as it seems now. As of now, the coin reached the $10,400 resistance as the daily high. Consequently, Bitcoin's market cap has increased as well to above 192 billion. Yet the more impressive gains from the altcoins have reduced Bitcoin's dominance. The metric compared Bitcoin's market cap with the alts has dropped to 56.5% after reaching 59% earlier this week. It's worth noting that yesterday was a highly positive trading day for most financial markets. Exactly. The most prominent U.S. stock market indexes recovered to some extent from the recent losses. The S&P 500 closed with 2% gains, the Dow Jones Industrial Average with 1.6%, and NASDAQ went up by 2.7%. Gold price also increased from its intraday low of $1,920 per ounce to over $1,945. Okay, so yeah, all the markets were up, but crypto's looking nice right now. I was just looking at my stock portfolio, and I've pretty much recuperated almost all the losses from the last 3 or 4 days. A little bit left to go. We'll see how it goes, though, folks. We'll see how it goes. We can take a look at the crypto prices now. Yeah, I mean, basically everything in the green. I use coinmarketcap.com, by the way, but you can also look at the Coin360 if you kind of like that map, heat map, if you will. Yeah, and like the article said, actually I think gold's a little higher than the article stated at this point. But in reality, I wanted to go over this article. It's going to be a weird one. I can tell just by the way it's written from Zero Hedge, but let's see. The battle is coming. Reality versus delusion. Denial is not just a river in Africa. So Tesla bounced, really? Schrodinger's and all that. I guess he's referring to Schrodinger's cat. Yeah, even a dead cat will bounce. And I mean, you look at the market, maybe that's all this is. So we'll see. I'm going to try something different this morning, so please bear with me and let me know what you think. I woke up with a headache from thinking about where markets are going. Markets are very complex at the moment. There are a host of conflicting short, medium, and long-term dynamics underway, which are happening and interacting faster with more impact than many of us have the capacity to understand. Try it. The speed of change is skipping by us, numbing us to many of changes going on around us. I've been trying to step back and figure it out, but trying together the contradictory bluster of market dynamics is going to take longer than the few hours I normally spend on the porridge over a cup of tea each morning. So instead, I'm going to just chuckle a whole series of vaguely connected thoughts at my cell home office wall and see if some of them stick. Okay, here are some random thoughts about markets, politics, and the C19. Doesn't matter how serious C19 has been, the effect has been to shock the global economy. Yeah, I definitely agree with that. The pandemic details moving markets in the short term, but also setting the narrative for the future. The effect of each new lockdown, vaccine hopes, or government failure on testing can be seen daily. The longer-lasting effects on company plans and government spending will ultimately determine where the global economy goes. Reality. Even after a cure, the pandemic will remain a historical shock that's roiled short-term markets and set multiple long-term agenda. Stop denying it. Get used to it. Multiple long-term agenda. I agree with that. I don't even want to get into it, but I think you know what I'm talking about, folks. Bubbles and value. A speculative bubble burst is underway. Investors' belief in exceptional story stocks and missing out on cheap new IPOs has been a factor of markets since someone first swapped a bushel of corn for a piglet. Hype and FOMO drive up hopes and expectations. The last 6 months has seen the bubble vibe reach extraordinary levels. Look at tech and new IPOs going to crazy prices. It's been fueled by the ultra low zero returns from markets and fear of the future. There's always denial bubbles will burst, usually because of the false notion. This time it's different. I got called a fat moron and worse on the Twitter sphere for my comments yesterday about Tesla being worth 10% of its peak value. Wow. Even though there may be a curious logic behind bubbles, the lack of returns means they burst and inevitably suffer from mean reversion. Reality, bubbles are inevitable. Ignore them. Value lies in cheap and underpriced. It's not apparent yet, but every market recovery and the most attractive opportunities and gains come from knocked back, neglected, and cheap assets. So he's basically going over random thoughts about random financial subjects. The first paragraph being like a conjecture or a theory, and then the second paragraph dubbed reality, and in italics being what he really thinks, I guess. But it's all finance related, and I definitely want to read it. The global economy, whatever the optimists say about the apparent strength and speed of recovery from the pandemic shutdown, it's had very real negative effects. Growth may be returning and many of the jobs lost or furloughed have been reopened. However, vast sectors of the tourism, hospitality, and aerospace industry remain shuttered, which will continue to drag down economies. There has been repressed consumer spending, but equally there is genuine consumer fears about their jobs. And then the reality is no one is talking about V or L-shaped recoveries anymore. It's more complex. The real economy has taken a massive knock, and that could take years to play out, even if global GDP recovers more quickly. As the economy recovers, it will adapt. It's likely we'll see 90 to 95% of activity recover quickly, but the last 5 to 10% prove much more difficult and sticky as the economy struggles to adapt to the massive pandemic changes. He's got a lot of good thoughts. Wow. I like this article for sure. It's super long. I don't know if I want to read the whole thing. I'm going to skip down to this section about political economy and then read his conclusion. There is a section about gold and fiat and stuff like that, so you may want to check this out. I'll put the link to this video in the description below. The political economy. Over the 12 years I've been writing The Porridge, I've come to understand that markets will always be markets, no matter how distorted they become. However, the most active force upon them is politics. I don't think markets appreciate just how fundamentally and quickly politics is changing. In the past year, markets took great relief when the UK rejected its flirtation with Corbynism, and everyone agreed Bernie Sanders would have been a terrible president. But listen and look at what's happening out there as society changes and adapts. It's happening faster than you think. There is a growing sense of deja vu. This has happened before. Big companies, the banks, senior management, and owners are reaping the rewards. They are being bailed out while losses are being felt most across the lowest echelons of society. The more middle class a job, the easier it's been to work from home and avoid furlough. Seriously, that's my life right now. That may change as manual workers are seeing their jobs return, while many office workers are likely to learn what an unemployment office looks like. Inequality is rising. The reality is that over the last 12 years since the last crisis, the consequences of overregulation, quantitative easing, NIRP, ZIRP, tax handouts, and the rest has been greatly distorting markets and changed political behaviors and expectations. It's leading to massive social changes that markets have been resolutely blind into in terms of rising income inequality and social injustice. The battle is coming. Markets hide behind the monetarist claim private enterprise will always do things better than government. Markets love the shareholder economy. Milton Friedman's dictum that the recipe for success is to run companies to maximize shareholder returns. However, corporate failures, Boeing as an example, massive payouts to lackluster management, and billionaires in a world that still can't eradicate poverty cry for change. A shift towards a more inclusive and equalizing stakeholder capitalism where workers and consumers share with the owners and the management the fruits of their combined labor and spending is underway whether markets like it or not. That's the way the politics will trend. Interesting. I mean, it kind of sounds nice, if you work full time for a company and they have to start spitting out shares to you. I don't know. Such a shift in the role of government has not been properly addressed by the lethargic political classes, although I suspect the chaotic Boris Johnson government will stagger into it at some point and get it profoundly mixed up. Reality. The world is changing. Politics is likely to demand a shift from wealth creation in the private sector. That's not necessarily a bad thing in terms of health, education, and welfare provision, and may mean a vastly increased role for infrastructure finance. At the end of the day, it will all depend on government debt. Will the MMT illusion work? And I think he cites what MMT is here, Modern Monetary Theory. Interesting. It's a really good article, folks. I'm going to end the update there. I mean, I didn't really have much in terms of things that were super worth talking about when I looked at the news across, the favorite markets of mine, right? Like crypto, metals, stocks, other than things are rebounding. Now, is it a dead cat bouncing or is it a legit gains as the dip is over? I mean, we'll see. For now, I will post the link to this article in the description of my video. And with that, we'll see you tomorrow. Have a good one.